Good afternoon, everyone. Thank you all for joining myself, Chris Hassall from Carrick, George Radford from One Global for our specialised Ghana webinar, where we're going to be discussing all things Ghana and the UK. And we're going to be launching a brand new phenomenal property investment opportunity for you all. Now, I'm sure many of you are already aware that Carrick already has a significant footprint within West Africa and Ghana specifically, and in particular. We already work with a large number of clients within Ghana, helping them with anything to do with their financial planning goals and objectives on an international offshore basis. Now, that typically will be in the construction of well-balanced and well-diversified portfolios in terms of asset class, jurisdiction, and obviously currencies. Again, as you're probably aware, Carrick at its very core is African, and we love working with our clients in Ghana. It's a phenomenal and fantastic country that has huge potential. But like most of Africa, it also has its challenges that we as a company fully understand in terms of the volatility, the Cedi depreciation, high levels of inflation, and of course, most recently, the uncertainty in the financial system, where government, had to take over banks, and obviously the fund managers lost the licenses. Now, being Ghanaian, you'll inevitably, have assets within Ghana, but it's also our job to help provide solutions to help alleviate those challenges and give the diversification that a portfolio obviously needs. Now, property forms a critical part of that, and always will, which is why we are always looking for solutions internationally for our clients. Now, with the strong links that exist already between Ghana and the UK, and London in particular, this represents a brilliant match, and that's why I'm thrilled to bring this investment opportunity to you today through a FTSE 100 listed and multi-award winning developer. Now, we've worked with George for a number of years on many projects, but this one really stood out to us. And I'm going to pass you over to him now so he can tell you in far greater detail about this, obviously this investment case. Well, yes, we're going to try and answer as many questions as we can, but we do have a lot of people on this webinar. So if your question doesn't get answered, then please reach out straight after this meeting to your wealth specialist about this or any of the services that we offer. But again, thank you for joining us. Hopefully you're going to find this very worthwhile. I'm going to pass you to George, and he's going to tell you about this fantastic investment. Thank you, George.
Brilliant. Thank you, Chris, and a big welcome to everyone. Good afternoon. My name's George Radford. I'm delighted to be here to present a really landmark development with the biggest and best UK developer, Barrat London, part of Barrat Homes. Chris, thank you to yourself and the Carrick team for the invitation. It's a real pleasure. By way of introduction and background, so I'm currently sitting in England, but I've spent the last 10 years working with clients across the Africa region, and a lot of clients actually in the West Africa region, predominantly Ghana and Nigeria, and help those clients to invest in international property. So I've got over 20 years experience in total. I'm a chartered surveyor. So I'm very well placed to assist clients based in Africa. I understand the investment drivers and the reasons why clients want to invest in fixed assets like property in tier one markets, predominantly for diversification purposes. But I also understand some of the challenges that can present by virtue of the fact that clients are based in African markets. So I'm very much a specialist in that area and very well placed to assist you with your property needs. So the company that I work for is One Global Property Services. I'm one of the founding members of One Global Middle East and Africa. So a very high level background on the business. We work with individual clients around the world, and we help them to invest into direct residential property. We're headquartered in Singapore. We were founded in 2017. We've got offices across Asia, the Middle East, Africa, and also in the United Kingdom. And ultimately what we do is we work with individual clients and help them to effectively and efficiently and safely invest in direct residential property. And we do so in a way that's designed to optimize the client's return on investment, to make sure that where you're putting your money generates the optimum return when it comes to buying property. We've won multiple awards over the years, as you can see at the bottom there, for our work, which further supports what we do. So in terms of the business model and the services that we provide, so quite simply, it is an end-to-end investment service. So at the front end, we'll undertake all the research and the due diligence on the developer and the development and the markets and the area, and make sure that anything we're bringing to market is with the best developers in the market, and it represents good value and is in a key growth area for for the next 5 or 10 years. We will understand clients' investment requirements and align the most suitable product with the client's requirements. So we will understand your investment drivers and your investment budget and what you're trying to achieve, and then align that with the most suitable property asset. We will also, once a client's committed to a purchase, we will facilitate the conveyancing or the legal process with local lawyers in market. We also facilitate the mortgages. So for clients looking to take finance, which is a big driver, and I'll elaborate on that a bit more in the presentation, we facilitate that with our network of banks and mortgage brokers. And then when that 1 or 2 bed apartment in London, for example, completes in 6 or 12 months time, or whenever it may be, we will facilitate and manage the property, secure the tenant, collect the rent, pay it into your bank account. And then when you wish to exit the investment, we'll deal with the resale at the back end. So as I mentioned earlier, I'm really delighted to be here to present to you and to launch a very much a landmark development with Barratt London. Before I do that, I just think I want to take a step back and reflect on the UK market and the London market as a whole. So, why do we and why do our clients like the UK? And also to clarify, I suppose, we're not just investing in London. We think it's a great market. We've got opportunities across the whole of the UK, especially in the likes of Birmingham and Manchester. But let's focus on London today. So why do we like the United Kingdom as a property market? It offers great stability for clients. It's a very transparent market. There's a very strong legal system, which is very well established and gives clients a lot of protection when they're buying property assets. The sterling is still relatively weak, especially for clients who are US dollar holders. If you look at the strength of sterling now, there's still some very good value to be had compared to many years ago. The cost of borrowing is still pretty low in the United Kingdom, even for international clients. We'll elaborate on that a bit further on. And I suppose more recently, the United Kingdom has performed very well as a whole from a property perspective. So in 2020, we saw growth in excess of 7% across the whole of the United Kingdom, which is quite remarkable and shows fantastic resilience, given we've been in the heart of the pandemic. And that's continuing into 2021 as well, which is fantastic. I think also, if you look at the vaccination program and how we're managing that in the United Kingdom, we're really world leaders on that front, and that's renewing confidence in the economy. The economy is slowly but surely opening up again, and there's a lot of positivity now here in England. However, there is still a shortage of supply, which is great. We're delivering 160,000 units a year on average over the last decade. We need pretty much double that to cater for domestic housing needs. So we have a very nice supply and demand imbalance. which is great for investors, and that's why we still favour the UK as one of the best international markets globally. If we look at London, which we're going to focus on now with this development in Harrow, why London? Well, quite simply, it's still one of the most significant, in many ways, the most significant financial centre globally, both from a banking, insurance and other financial services perspective. It's a fantastic hub for education. It's a world leader in medical facilities. It's got some of the best universities, as I mentioned. It really is a tech hub in its own right. London is one of the biggest tech hubs in the world and biggest startup hubs in the world. And you've got an economy that's been identified within London as the #2 city for investment prospects by PwC for 2021. It's been highlighted as the #1 city by Schroders on their Global City Index. And if you look at Savills, linking back to property, they're forecasting growth, pushing on to 4% for 2021 alone. So it's all very positive. So let's come back to Eastman Village and Harrow. So I'm really delighted to be working with Barratt London, who are part of Barrat Homes, who are the biggest developer in the United Kingdom, both by volume, in terms of number of units that they're delivering, but also by size. I mean, they're a FTSE 100 company, and I suppose even more importantly than that, they deliver a fantastic product, and they've won more awards over the last 10 to 15 years for the quality of their work than any other major UK house builder, which is quite an accolade. They've been going for over 60 years. They've been in London for over 30 years, and they specialise in the London region across the whole of Greater London. So we're going to have a look now at Harrow and the development we've got there, which is in northwest London, called Eastman Village. For those of you who are not so familiar with London, this is to the northwest of London, of Greater London, I should say. The development is located here, where that red dot is. The local train station here is Harrow and Wealdstone, which is the Bakerloo line, and then there's 4 other overground lines in close proximity. From a road connectivity, easy access both into central London from here, but also to get out of London. You can be to Heathrow Airport, for example, within around 20 minutes, and you can access the M25 in sort of 5 to 10 minutes from the property. So great connectivity, both to get into London, but also to get out of London. From a rail perspective, I'll elaborate on that a bit more in a second in terms of the journey times. So Harrow as an area, I mean, a lot of people on the call will be familiar with Harrow because of how prestigious Harrow School is. It's one of the most famous schools in the world. It's one of the best schools in the world from an education perspective. Also one of the most expensive. But they've had many a prime minister educated within Harrow, and including Winston Churchill, and it is truly an elite school. Unfortunately, not all of us can afford to go there. So it's good news that Harrow as an area also has 32 outstanding schools as rated by Ofsted, which again is fantastic for a Greater London borough to have that quality of educational facilities on the doorstep. It's also one of the greenest boroughs in London, and as I mentioned earlier, it's very well connected. So I think in the world that we're living in now, where a lot of people still want to be close to London from a business perspective, and they want to be well connected to the transport, the London Underground and so on and so forth. They don't necessarily want to be right in London, and they want to be able to get out of London quite quickly. And Harrow, for me, really is a standout location for that very reason. From a train and underground perspective then, so it's quite often when you buy in Greater London and you start pushing out to the borders of the M25 circular, you quite often have to sacrifice having access to an underground station. Harrow is located within Zone 5, and within a 10-minute walk of the property you can access the Bakerloo line, which can take you straight into central London. You can get to Oxford Circus in 37 minutes. You can get to Baker Street in less than sort of 20 minutes, which is sort of two of the key locations within central London. And then on the overground, you can get to Euston, and from Euston, that's where Crossrail will run from, and you can get anywhere in the country, and you know, not far from King's Cross, obviously, you can get almost anywhere in Europe from there. So really, really well connected as a place, and the development is 10 minutes away from all of those transport links. So the project itself is absolutely steeped in history. So the old Kodak camera factory, this is the former site for the Kodak camera factory. You know, a bit of a dinosaur of a company, I suppose, because it was the inventor of film cameras, roll films, and naturally, with the way technology has changed and most of us use our phones for cameras, unfortunately, the factory had to close in recent years, and it's been a long time in the making to bring this redevelopment to surface. So it really does present a great opportunity for clients to invest into this new development on the site and buy into a piece of British history, but very much an important part of the history of the local area of Harrow. Sure, we all remember the Kodak cameras and our father's cameras, and even some people's own cameras, and I'm sure there's still a few floating around. But yeah, sad, but it nonetheless creates an opportunity. So linked to that, I want to talk about regeneration. So absolutely crucial when we're looking at investing in property to invest in key growth areas, and that's what we're trying to do here. So there's a £1.75 billion regeneration programme which is underway in Harrow. It's creating over 5,000 new homes, 2 new schools, regenerating the high streets, the train stations, parklands, new commercial facilities, gymnasiums, and so on and so forth. So it's really giving the whole of Harrow a massive facelift, and making it an even better place to live. And naturally, by buying property in that type of location, you're going to benefit from that rejuvenation. In terms of what part of that regeneration programme Barratt London are taking control of, Barratt are building in excess of 3,000 new homes. So out of the 5,500 new homes being built, they're building 3,000 of those in Eastman Village. And the project we're going to be looking at today is actually this block here specifically, which is called Penrose Apartments. I'll elaborate on that in a bit more detail shortly, but it's the tallest tower and the last block, I may add, in phase 1 of the redevelopment. All of these properties here have already been completed. These bits are under construction. Penrose is the last block completing in phase 1. And I'll elaborate a bit more on some of the other properties that are being built within that development shortly. But as you can see, new schools, new shops, new supermarkets, cafes, restaurants. So really creating a new village. I won't dwell too much on this, but essentially what I'm trying to show is we're buying these for investment purposes. Of course, a lot of my clients and our clients have bought properties for their own use, maybe for their children's use, lucky children. But we're looking ultimately at how to optimize one's return on your money. What this graph here shows, that red line there is the average London property growth. And these bars here are showing the growth relative to the London growth within specific key regeneration areas across the city. And all we're trying to show is that if you buy in a really good regeneration area, you will make more money. And again, that is further reinforced by this. I appreciate it's probably a bit small. We will be sharing the presentation following this webinar, so please have a look then. But again, there are 10 different key regeneration areas in London, shown on this graph. And what the green one is showing is the growth within those locations, generally speaking, in terms of the property growth for that period. And then the yellow on the top is showing how much more growth you get above and beyond that when you're buying into a really key new build regeneration project. So hopefully that makes sense. We're trying to identify value and get into a project in the right location at the right time that's going to deliver us the most return on equity. To just touch upon green developments and sustainability, especially in the world in which we currently live, is something that's very close to my heart, and it should be to all of us, really, given what's going on in the world. And we do need to build sustainably, and we need to design property in a way that facilitates sustainability. And Barrat are very much in tune with that, and Eastman Village is leading by example. So creating lots of green spaces, using sustainable materials, contributing to local planning authorities to develop parks, creating a new gymnasium on the site for health and well-being. There's a direct link path from the development to the local park. There's another example. And they're creating a very low energy use or energy efficient energy centre within the development, again, which buys into that sustainability. So I do think it's very important, and not necessarily a point to labour any more than I have, but I think it's something that developers are being more and more mindful of now, because they know that people are looking for greener investments. Coming back to the actual master plan for the development, so just to recap, this is Eastman Village, phase 1 on this side. All of these blocks here have been completed. I was at the project in November, and I was there again last week, and it's amazing to see the progress that's happened over those 4 months, but absolutely blown away by the quality of the build, and I'll talk about that a bit more in a second. So Penrose is this dark blue block here, 9 stories in total, 71 units. What we've got here, this tower there, that's actually the original chimney from the factory, which is listed and is going to be retained. We have the energy centre there. There's retail shops and cafes going in here. There is some office, there's an office element going in up here at the top, so commercial office space. School is going to go in here, and then a large majority of the balance will be residential. So, really creating a community, I suppose, is the point we're trying to get across here. So this is Penrose Apartments, 1 beds in this development starting from 328,000, 2 beds from 425, and there's 1 3-bed apartment at 575. The property is currently under construction, as I mentioned. It completes in July 2022, so it's about 1.25 years off plan, and it's the final block within phase 1. We know from experience from working with the likes of Barrat and other developers that, as phase 2 and phase 3 are launched, those prices will naturally increase. So again, we see a fantastic opportunity for clients to buy here in the final phase of phase 1 and benefit from that upside as phase 2 and 3 and 4 are launched. Another point to make is the development itself is the tenure is a 999-year leasehold, which is virtual freehold, which is really, really important, because a lot of the stuff you see out there now for sale in the UK can be 125-year leasehold, a 250-year leasehold, and they have quite punitive ground rent provisions, whereas here it's a 999-year leasehold, virtual freehold, with a peppercorn ground rent, which is really important if you're close to property for a number of reasons. 1, it increases your yield, and 2, it means that there's not going to be any issues with lending, because some lenders don't like ground rents that are too high. probably a bit of a softer point, I suppose, that maybe those who are not so familiar with the UK property system are aware of, but it's a really important point to highlight, and that's our job, to bring developments like this that offer those sort of benefits to clients. Let's have a quick look then at some of the floor plans. Something else I really like about this development is the design of the units, very much open plan. A lot of them have, every unit in the building has balconies. The specification is very high level of connectivity as well. So perfectly designed for home working, lots of green spaces incorporated within the design of the master plan. This is your typical 1-bed apartment layout. This is your 2-bed apartment layout, and there's the 3-bed. Again, we'll be circulating all the information after the presentation, so please do have a look. In terms of the specification, as I mentioned, I was there last week. Super impressed again with the quality of I went into some of the show flats in some of the previous blocks that have been completed, and just the quality of the finish. I've been to many projects in my time, and I was particularly impressed with the quality of the finish within this development, and I suppose that's obviously why Barrat have won so many awards over the last 15 years for the quality of their work. Again, we'll circulate this following the presentation, and please do have a read. Okay, let's come on to the mortgages. I think before I touch upon this, I think another key point which I haven't mentioned, another reason why it's an important reason to highlight why ourselves and Carrick really like this development. A lot of international property that's sold offshore is very much driven towards the buy-to-let market. Barrat predominantly are a UK domestic house builder. Why is that relevant? It means that within this development, for example, around 85% of the development that has been sold so far has been sold to local UK owner-occupiers. So that's really important for us, because we know that our clients buying into this development, who are typically buying for buy-to-let purposes, are not buying into a project where there's a really high volume of investor buyers. That's really important for a number of reasons. One, it means that mortgage availability is very sound, because banks don't like to lend on a development which is purely buy-to-let investors, for obvious reasons. Secondly, it means that when these properties complete, our clients can secure tenants far quicker because there's less competition on the market, because those other people in the development are living there. It's their primary residence. And then thirdly, from a resale perspective, less competition on the market typically means we can sell properties quicker and achieve better prices on the resale. Let's have a look at the mortgages. Often a question I get asked by clients. So we will pre-qualify any investors that we work with for lending purposes. And who can we help? We can help local Ghanaians. We can help expats based in Ghana. If we're buying in the UK, you don't have to have a British passport or have a British connection in order to get access to UK banks and UK mortgages. If you do have some ties to the United Kingdom, maybe your spouse has a British passport, maybe you've got a property in the United Kingdom or UK bank account, maybe you've worked there before. All these sorts of things do help to increase the availability of different lenders, but it's not certainly mandatory. And we can also help employed individuals and self-employed. And we can secure both residential mortgages. Maybe there's some people on the call who are buying properties for themselves to live in, or for their children to live in at university, or if not, if you're buying for investment purposes, we also specialise in investment buy-to-let mortgages. In terms of the products, you get two types of mortgages in the United Kingdom. One is a repayment mortgage, another one is an interest only. So two different products, and we can offer both. In terms of the mortgage amounts, we can get up to say 65% mortgages, meaning clients only have to put in 35% of equity, and the rates can be typically around 4%, can be a bit less, and they can either be fixed rates, 2 years or 5-year fixed, or variable rates. So again, it's horses for courses, and every client has the right to choose the product that's most suitable for them, and we will manage that process for you. In terms of the qualification requirements, ballpark figure in terms of annual income, around £50,000 per year in terms of your income. And yeah, I think those are sort of the key points to get across. We can help you. The next step would be to do an individual assessment, understand your financial circumstances, and then we can present you with the type of mortgage products that would be available to you. And then my final slide should be my final slide. Bear with me. There we are. Whoops, I went too far. There we are. So the purchase process. So as I mentioned at the start, we have a whole range of investment opportunities across the UK and other markets. But you know, let's focus on Eastman Village and the purchase process in this particular project. But we do have a range of different options, maybe for people attending this call who may be looking at a lower price investment or a higher price investment. We can facilitate that for you as well and assist you. But in terms of Eastman Village, this is the process if clients did want to proceed and to buy a unit. So naturally, we would have a meeting and understand your requirements, explain a lot more depth and detail to you on the Eastman Village opportunity. We would understand your lending ability and what sort of mortgage products you can get access to. And then we would align that with the most suitable unit within this project. So let's say you're buying a one-bed apartment. Let's say it's £330,000, there or thereabouts. What you'd have to do is we reserve the unit for you. You would pay £2,000 reservation fee. We would then require within 28 days a further 10% deposit plus some initial legal fees, which would equate to around £34,000. Worth noting that your 10% deposit is fully protected under the NHBC warranty in the United Kingdom, which is really important, gives you security and peace of mind. And then obviously the development is off plan. It doesn't complete for another 1.25 years, 1.5 years, July 2022. And at that point, you would pay another 25% plus your costs, which would be £114,000. That's payable in July 2022. So your total equity requirement on this example of a one-bed unit would be £150,000. That is obviously your completion payment there, £114,000, plus your deposit payment of £34,000, which is due within 28 days, and the reservation fee of £2,000, which is payable now. And then based on fairly conservative assumptions, over a 10-year hold, a 65% mortgage, very sort of conservative growth assumptions of 3 or 4% growth a year. We're looking at profit on the investment, overall profit of around £138,000, which represents a return on equity of around 90%. And therein, coming back to one of the agenda items of how can you fund for children's education by investing in international property and UK property, I think there is your answer. Very expensive sending the kids to university nowadays. And if we buy well-in property like this, and we invest our money wisely, we can make significant money, and we can use those funds to cover children's university education. So I will now pass back to Chris Hassall. I'd like to say thank you very much to everyone from my perspective for attending. Happy to take any questions there may be, and thank you very much for your time.
Thank you very much, George. I think we can all agree that's a wonderful opportunity and something I'm very excited about, actually. So yeah, it's very impressive. So thanks a lot for that, George. We have had a number of questions. Actually, a lot of them were answered by what you covered. But I think what we'll do is reach out to you individually, all of you after this, and we can answer questions directly. But yeah, I think we'll be in contact. But if there's specifically anything that you want to talk to us about, if this is something that you're interested in, then please reach out to us, and we can set up one-to-ones with myself and George, and really get into a lot more finer detail in terms of units and those types of things. But we're going to let you get back on with your afternoon. I'm sure you've got many other things to do, but again, thank you for joining us. I hope you found it useful and worthwhile and beneficial. Have a fantastic day. Thanks again, George, and hopefully we'll speak to you soon.
Thank you.